Residential real estate or commercial real estate? For the newbies out there in real estate investing, let's start with the basics. What is residential real estate? Basically, these are all about properties designed for living purposes. It includes everything from single-family homes to multi-family dwellings like apartments and condos. What is commercial real estate? Well, commercial real estate includes properties that are zoned and used for commercial purposes. Think office buildings, retail spaces, warehouses, factories, and more. But if you had the option to invest between residential and commercial real estate, which would you choose? Well, that depends on your individual goals and needs as an investor, and if you watch until the end of this video, I want to show you exactly how to navigate between the two and help you make an informed decision. So get a pen, paper, take notes, and let's get down to business. Number 1. Commercial real estate relies on networks. When it comes to commercial real estate, trust me, your network is everything. Unlike residential real estate, where the process may be more straightforward, commercial deals rely heavily on your connections. The larger your network, the more opportunities you'll have. Here's a valuable tip. Make sure you're acquainted with the right agents. Smart investors understand the importance of working with commercial agents, even if they primarily specialize in residential properties. As long as they can get the deals done, these agents can be a valuable asset in the commercial real estate world. Building a strong network of professionals in the industry can open doors to lucrative opportunities and valuable partnerships. Don't underestimate the power of connections in commercial real estate. Cultivate relationships, attend networking events, and collaborate with others to maximize your chances of success. Remember, in commercial real estate, it's not just about what you know, but also who you know. Don't leave just yet, because I'll tell you all the things you need to know about residential and commercial real estate. Watch the video until the very end to know the big difference between the two.
Before we dive in, be sure to like the video and subscribe to the channel. Do you want the chance to win a brand new iPhone 14 Pro, MacBook Pro, or a $500 Amazon gift card? Find the hidden message that's in the video, comment it down below, and subscribe to the channel. We will choose one random subscriber in each video for a chance to win one of these amazing prizes. Don't forget to hit the like button, and good luck.
Number 2. Residential properties are subject to the whims of the owner. The size of the transaction doesn't necessarily determine its uniqueness. The real distinction lies in the use case. Residential properties are susceptible to the whims of individual owners, which can significantly influence sales, rental rates, and overall asset pricing. The decisions made by a single owner, such as modifications, pricing strategies, or even personal preferences, can have a profound impact on the property's value and market dynamics. On the other hand, commercial properties primarily serve as functional utilities. They're designed to cater to specific business needs, making them less susceptible to the individual preferences or whims of an owner. The focus is on providing a space that meets commercial requirements, whether it's an office building, retail space, or industrial facility. While both residential and commercial properties fall under the umbrella of real estate, the nature of their use and the factors that influence their value differ significantly. Here's the two in a nutshell. Residential assets are more subject to the influence of individual owners, while commercial properties are driven by their utility and appeal to specific business needs. Number 3. Commercial properties need thorough documentation. Unlike flipping a residential house where buyers may focus more on the property's aesthetics, in commercial real estate, potential buyers are interested in the growth and reliability of the income stream. To attract buyers and achieve exceptional returns, careful record-keeping of income, expenses, and overall performance is crucial in commercial investments. This documentation provides transparency and serves as evidence of the property's financial success, making it more appealing to prospective buyers. By maintaining detailed records of income generated by the property, including rental income, lease agreements, and any additional revenue streams, you can demonstrate the property's profitability and potential for future growth. It is equally vital to track expenses such as maintenance costs, property management fees, and insurance premiums to provide a comprehensive financial overview. What's more is that monitoring the property's performance metrics such as occupancy rates, rental yield, and cash flow enables you to evaluate its success and make informed decisions regarding pricing and investment strategies. Number 4. Residential properties are easier to finance. There are distinct differences in income potential and financing options between commercial real estate and residential properties. In terms of income, commercial often offers higher rental income opportunities due to longer lease agreements and the potential for multiple tenants. This means that you have the potential to earn more money from commercial properties compared to residential ones. However, note that financing for residential properties is generally easier to obtain. Banks and lenders are more familiar with residential mortgages and have streamlined processes in place. This makes it simpler for individuals to secure financing for residential properties, especially if they have a good credit score and meet the necessary requirements. On the other hand, financing commercial properties can be more challenging. Commercial loans typically require larger down payments and may have stricter eligibility criteria. The higher cost of commercial properties also means that investors need to have more capital up front. Number 5. Getting rid of non-paying commercial tenants is easy. Commercial real estate has a significant advantage over residential properties. In the residential sector, tenant rights and regulations can make it challenging for landlords to remove non-paying tenants. Residential tenancy laws often provide tenants with certain protections which can result in lengthy legal processes when it comes to eviction. Some individuals take advantage of these laws, leading to situations where they remain in the property without paying rent, essentially squatting on the landlord's expense. On the other hand, commercial leasing operates differently. If a commercial tenant fails to pay rent, landlords have more power to take immediate action. The lease terms in commercial agreements usually allow landlords to swiftly evict non-paying tenants. This means that landlords can quickly regain possession of the property and recover any missed rent. This distinction in eviction processes highlights one of the advantages of commercial real estate. Landlords can mitigate financial losses and maintain a steady income stream by promptly addressing non-payment issues in commercial properties. Number 6. Commercial real estate is all about team sport. While residential real estate transactions can sometimes move at lightning speed, commercial deals require a well-coordinated team effort. In the residential market, you might spend a Saturday visiting 5 houses, make a few offers, and have a contract accepted by Monday. It can be a whirlwind process. But in the world of commercial real estate, it's all about building a trusted team of professionals. A successful commercial transaction involves a collaborative effort between brokers, lenders, and underwriters. The brokers are on the front lines scouring the market for potential deals. The underwriters carefully evaluate numerous properties to determine which ones are worth making offers on. They may go through the process of underwriting 100 properties before finding the right one to pursue. Once an offer is submitted, it's up to the seller to evaluate the offers received and select the winning firm. Price is certainly a factor, but it's not the sole determinant. Other factors such as the reputation of the buyer, the terms and conditions of the offer, and the track record of the buyer's team all come into play. In commercial real estate, it truly is a team sport. Each member brings their expertise to the table, ensuring that the best deals are identified, evaluated, and pursued. It's through this collaborative effort that successful commercial transactions are made. Number 7. Both are valued differently. In the residential real estate world, the value of a property is typically determined by comparing it to similar residential properties in the area. You look at the size, location, amenities, and recent sale prices of comparable homes to come up with an estimate. It's like finding a twin for your property and seeing how much it's worth. On the other hand, commercial real estate is a whole different ballgame. The value of commercial properties is primarily based on their income-generating potential. Investors evaluate the property from an investment perspective, looking at the income it can generate through rent or other revenue streams. This requires a deep understanding of industry standards, financials, and market conditions. To determine the value of a commercial property, investors consider factors like rental income, occupancy rates, lease terms, and operating expenses. They crunch numbers, analyze cash flows, and make projections to assess the property's investment potential. Although it's not a matter of one being better than the other, residential rental property tends to be more accessible and affordable for most investors. Residential properties offer a wider range of options and are easier to find and finance. The demand for housing is consistently strong, and residential rentals have proven to be a reliable investment even during economic fluctuations. Commercial real estate offers unique opportunities for those looking to invest in office buildings, retail spaces, and other commercial properties. However, it often requires a larger investment upfront and comes with a higher level of complexity. But at the end of the day, the final decision is yours. So which do you think is better, residential or commercial real estate? Please leave your thoughts in the comment section below. Don't forget to like and subscribe to the channel for more content like this, but honestly, if you ask me, multifamily residential properties will be your best bet for obtaining long-term financial success. And if you want to know exactly how to get started, watch this video next, where we'll break it down step by step. Click the video on the screen now, and we'll see you in the next one.